Welcome to the Tech Index AI podcast, where we blend tech index data, reports, and charts with the latest news in all things logistics, with a real focus on air cargo. Today, we're doing a deep dive into some, fascinating sources. We're exploring the latest air freight market movements and those broader macroeconomic factors shaping global trade right now. Okay, let's unpack this.
Yeah, our mission today is really to connect the dots for you. We'll go from those, nuanced shifts in air freight rates from TAC index right through to the high stakes talks on tariffs and central bank policies, and hopefully see how it all kind of impacts the macro market as a whole.
Right. The overall picture, it might seem calm sometimes, but like always, the devil's really in the details, isn't it? What were the standout movements in air freight this time? What really tells the story from the latest TAC index data?
Absolutely. So the latest data, this is from July 29, 2025. It shows global air freight prices were largely unchanged overall last week. But like you said, that calm global average, it masks quite a bit of variation on the major lanes. The Baltic Air Freight Index, the BAI 0, it edged just marginally lower, down 0.4% week over week.
Okay, so just a tiny dip globally, but that hides some pretty big individual moves, right?
Yeah.
You mentioned variations, what lanes really stood out, particularly out of, say, China.
Precisely. And that's where it gets interesting. Rates on the busiest lanes out of China, they actually saw gains, both to the U.S. and to Europe. Hong Kong, that's BAI 30, it gained 0.3% week over week. Shanghai, BAI 80, edged up just a little, 0.2%.
So some specific demand strength there, maybe e-commerce or product launches?
Could be. Yeah, it suggests specific flows are strong, even if the global trend is flatter.
And that regional variation is so key for anyone planning logistics. What about heading out of Europe and the U.S.? Did we see similar, localized action?
We did, yeah. Out of Europe, Frankfurt, the BAI 20 index, had a really healthy gain, actually, up 4.0% week over week. And that leaves it up a pretty remarkable 14.2% over the last 12 months. Suggests some real underlying strength there.
Okay, 14.2% year on year is quite something for Frankfurt.
It is, but then you look at London, BAI 40, it gave back a chunk of its recent gains, shed a significant 16.4% just last week.
Wow, okay, a big drop.
A big drop, yeah. Though it's still showing a strong year-over-year gain, mind you, up 17.7%. So volatility there.
In the U.S.
From the U.S., Chicago BAI 50 also saw gains, up 6.7% week over week. That was mainly on lanes to China and South America. So, these individual movements really highlight how crucial it is for you, the listener, to look beyond just the headline numbers. You've got to understand the specific market dynamics.
That makes sense. These granular rate moves are fascinating, but how do these sort of micro-level shifts in air freight connect with the bigger picture?
Yeah.
The, high-stakes macro factors shaping global trade.
That's the crucial connection, isn't it? And on that global trade front, we've seen some equally compelling developments. The U.S. and China, for instance, they recently held what they called constructive talks over in Stockholm. They agreed to seek an extension of their 90-day tariff truce, which was due to expire August 12th.
An extension is good, but President Trump still has the final say, right?
Exactly. The final decision rests there. And apparently these talks also touched on critical goods, things like rare earths and, interestingly, NVIDIA's H20 AI chips.
Ah, the high-tech components.
Yeah.
Very time-sensitive, high-value air freight candidates.
Precisely. Logistics for those is critical.
So even as they're talking, that shadow of potential tariffs is still hanging there. And you mentioned the IMF has flagged this as a risk.
That's right. The IMF sees potential rebounds in tariff rates as a major risk to global growth. And for logistics, well, that's not just about higher costs.
No, it forces strategic shifts, right? Sourcing, capacity planning, everything.
It fundamentally alters supply chain thinking, yeah.
Yeah.
And looking at another key relationship, U.S.-India, that trade deal still isn't finalized. Talks are progressing, apparently, but President Trump warned of potentially higher tariffs, maybe 20-25%, if a deal isn't sealed by August 1st.
August 1st, okay. And India is holding firm on agriculture and dairy.
Seems so. They remain unwilling to open those sectors. And remember, total goods trade between them was about $129 billion in 2024. So any tariffs there? Big ripple effects.
It really sounds like a diplomatic high-wire act.
Doesn't it?
Absolutely. And, okay, linking this all back to broader economic stability, what's really fascinating this week is the news coming out of the Federal Reserve. This week's Fed meeting could see something we haven't seen since, 1993. More than one Fed governor voting against the chair.
That's the story. Yes, it's quite rare. Governors Christopher Waller and Michelle Bowman, both Trump appointees, have apparently voiced support for cutting rates. Waller's argument is that the Fed should cut because the labor market isn't quite as healthy as it looks on the surface.
Interesting. So this potential dissent, Could it mark an end to the Fed's long era of, you know, building consensus?
It could, and that raises big questions about the institution's independence and, well, the whole economic direction. This potential crack in Fed consensus, it introduces a whole new layer of uncertainty into economic forecasting, makes long-term planning even tougher for air cargo operators who really thrive on stability.
Yeah, it's just so clear how intertwined everything is. Air cargo rates from TAC index, these high-level trade decisions, central bank stances, every piece really affects the next. It's a complex web for you to navigate out there.
It really is. And this brings us to an important question, something for you to consider. As these global trade deals hang in the balance and central banks potentially face internal dissent, how will this whole evolving landscape influence not just global demand, but the actual patterns, the routes, the profitability of logistics in the months ahead? Definitely something to mull over as you make your own informed decisions.